Hello traders, welcome. Thank you for joining me. This is Mike Hamilton from Trade the Easy Way for a look at the markets after the US jobs on Friday. I'm going to keep this nice and short and sweet, but I think this is a fantastic week to be doing the Scalper School course. I'll come on to that in a minute. But amazing markets on Friday. And this is what I was looking at on Friday. And it's exactly what we were looking at in the Scalper School. But huge drop. I actually had a stop out on this because my usual setup didn't work initially after the data. So I waited until the market got open, very patient, waited to see what they could do with it, and then took a trade and got a decent slice of this market. And they actually bounced it right back to the breakdown area very late in the session. And in the last hour, or last couple of hours, they dipped it and then took it up into 16,500. So this is a very bullish reaction to the data. It doesn't matter what the data said. It's a very, very bullish reaction. So what I'm looking for here is we seem to have confirmation that we could be getting a good W pattern here with this being the first leg of the W. This is making the wave to the upside, and here we have came down to this fib level, looked very dicey and very weak on as we came down to the 16,000. That's a significant move to the upside on Friday after a usual sort of volatility on that sort of situation. So I'm looking for a pullback. I'm going to wait till all the data's out on Monday and then see if we can get a pullback around about the 300 level. Ideally lower. I'm not sure we're going to get lower, but I'll see if that can take us into 17,000. It's a busy week on the data front. UK services on Monday. So we've got data up until half an hour after the US Open. Tuesday we've got Aussie rates and UK rates. So Aussie rates before we come to our desks on Tuesday. US trade balance on Tuesday. And then Wednesday we've got Bank of Japan conference because we've got Bank of Japan monetary statement. That's going to be very interesting. Okay, that has a bearing on what I was about to talk about. I missed that when I first looked through this. Note the increase that we're looking for on UK manufacturing. A lot of good data coming out of the UK. Looking for a move from minus 0.8 up to 0.5. Later on that day we've got GDP estimates. And here it gets interesting. Thursday UK rates. We're looking to keep rates. Highly unlikely that the UK will raise rates with the US not looking to raise theirs. At the moment we're looking for early 2016 for a US rate rise. In the last couple of years, the US economy has had a very slow rise in the first quarter out of the winter. So well, I'm not going to comment on and speculate on when the US may raise their rates because that's not particularly relevant for where we are this week, this coming week. I am doing a televised interview with a broker on Tuesday. I'll let you have a copy of that because that's going to be very interesting. It could be cover a lot of ground on big picture projections, weekly jobs and CAD jobs on Friday. But the other big issue here, the other big data point is, let me just find it here, FOMC minutes. This is going to be very, very interesting. FOMC minutes on Thursday, 2 hours before the US session closes. Right, let's go straight back to the charts. So looking for a pullback, and then I think we're gonna sticking point is going to be 650 because of this reversal bar here. But then the next point is the fib level up there, just above the 17,000 mark. Let's look at the longer time frames. If we look at the weekly, we've engulfed the previous week's bar. That's one of the reasons to be looking for some rises in this market. And on the monthly chart, we have, I talked about this before, we've not breached the 200 EMA. We just tested the, the 50 EMA. 200 EMA is way down here. So at some stage, markets always come and test the 50 EMA. So a couple of months back in August, we came in, we did that on that big push to the downside. This is a potential sort of certainly a weaker bar in September, and here we are already in October, right up against September's open. So if we can push up into this level here, if we can break last month's open level, which is Friday's close level, then we should see some retracements. The other thing I was going to get you to note is if you look at 07 here, we had a push to the downside, and the early part of 07 pushed up, but here we had some decent selling back into 12,500 here, and then pushed right up again. When was that? Let me check the dates. Pushed right up again into October, November, before dropping hard into December, or particularly January, February. So we are due a pushback. We are due a pullback after this tremendous selling, but I will be looking to get short up here around about the 17,500 mark. Right, moving on. There's not a lot setting up, but what is setting up is potentially big. I'm going to move straight over to oil here. Gold had a much bigger day on Friday, but oil has got a hammer above the 20 EMA here. I've just switched to simpler charts again. You can see I've got no indicators at the bottom. It is range bound. It's very range bound. But in a box play like this, it's typical to come into the bottom of the box, push up, come test the bottom of the box, push up. Now the box play is normally over once you come back down and don't retest the lows again. So that to me suggests that we could be putting a floor underneath this price, and a break through these levels here could see us coming to at least 50, maybe higher. And the weekly is dead flat, so be careful on that because that weekly is flat. What I would suggest is look for 44.60, get a close stop under 44, and then see what happens. In the meantime, the gold had a decent, very, very big push up there. Three-wave reversal pattern down here. If you're interested in this, I would try and buy 11.22. The weekly, however, was not brilliant. You can see all we've done on the weekly is just bashed up against this fib level here. And got the 20 EMA stooping down. So we could just crash into that 20 EMA and then start another leg. But with the data that came in on Friday and the reaction from the market, I'm expecting a weak data, a weak dollar. And here we have the dollar index closing lower on the daily and just slightly lower on the weekly up there on the top right. So where does that leave us? That leaves us with a US dollar CAD that's had 3 days of selling. We're coming into support. In fact, we've already come into some support here. So any pullback to 132.50. Sorry, I've got the wrong price there. Sorry. Yeah, any pullback into 13200, 132.50 is a selling opportunity. Look at the weekly up here. That would confirm that price. And this US dollar CAD has had a decent move to the upside. So we've had 1, 2, 3, 4, 5 A, B, C correction, D wave, 1, 2. Then we get sort of just flat. So it's Elliott wave becomes a little bit harder in that situation where it's so flat, but that is a rejection of the highs. It's a new high in the weekly chart with a close below on the following week. So a clear sell signal, and there's that 132.50, which is the potential for the short. And the other market I'm interested in, I think this pound yen, the pound US is a very similar chart, but I prefer this chart because of the way the monthly is sitting on the 200 EMA. I think this one could follow the indices up. It typically does like to track the indices. See, this breakdown here correlates with the big push down in the Dow and the other indices, and so again a buy signal here in the daily charts because we've had a new low in this little move here and a close above next day. So this is a potential same chart pattern that we've got in the Dow. So I would look to buy that in about 181.50 if I can, and then see if that can push higher. That's the two main charts I like. The euro is just less predictable, I think, in this chart pattern because we are just in such an apex there, and that's a very flat, completely flat doji bar last week. And euro yen was had 3 weeks of slower closes, a couple of higher closes in the daily. So US dollar CAD and the pound yen are the charts for me. And let's just look at the Aussie CAD for a moment because that has been looking okay. So we've got the CAD being the more dominant pair here. This is a tough one to trade. A less reliable chart because we're already coming to a lot of support there at 92.50. I just think the risk-reward ratio is just not very good because your stop would ideally have to be back. If you shorted this, your stop would have to be 94. And you've got all this support at 91.50, so the risk-reward ratio is poor. Let's have another look at the Aussie US. So the strength in the gold, I think this Aussie US is a good play. Based on that push higher in the gold, this is a better way of probably playing the gold because it's not shifted much. And if we can get a pullback to around about the 70 mark with a 60-point stop underneath that blue line, a little hammer-like bar in the weekly, I think that one is a goer. And if we break out of this channel, it's a low risk, high reward trade because you get a relatively tight stop. And if we close above 71.50, I think that'll open the door to 75. So I do like the Aussie dollar as well. If you want to play the dollar, bearing in mind the US dollar CAD's had 3 days of good selling, and this one is relatively sideways, this might be a better option. Okay, so that's the end of my commentary on Forex. Quick look at, I want to flip back to the indices a second because this FTSE was the best out of the DAX, FTSE and Dow that I follow closely. This FTSE was one of the best closes, much higher close. So a pullback to 61.10 is a good option on that one. Right, I will open the room at 2:45 on Monday just to look at the Dow at 3 o'clock. Otherwise, I'm only open it for half an hour, so if there's any potential opportunity to get in a trade and sit in that for the rest of the session. Otherwise, I'm going to do a quick look back at these Forex pairs I've noted here, and then I will talk to you about what I'm doing on the stock side. Right, enjoy what's left of your weekend, and I look forward to seeing you in the room. Now, if you've not booked for Scalper School, do have a look, because I think we've got some fantastic volatility this week on Friday, and I think we've got a lot more to come. I'll send you, if you look at the top left of this video, there's a link to this page here. You can watch a little video on what we're going to be doing in Scalper School, and that's a live, actually that's a live trade as well. Only 3 minutes long, and if you're interested, book, and then we will get an invoice sent out to you. It starts on Wednesday. All right, hope that helps, and see you then.